We're back with another video. My last two videos went over Fibonacci and supply and demand. On this video here, we're gonna go over divergence, right? Which is another awesome tool or strategy that I use in trading. I actually currently still use divergence due to the powerfulness on this strategy. Divergence, man, I cannot stress how crucial of a strategy that it is to use. I got introduced to this strategy by Brian Gilpin, aka My Life Real Quick on Instagram. He has his own course with the red package and also boot camp. Dope trader. I kind of picked up on some knowledge from him in Q Banks, but nonetheless, divergence is, like I said, a awesome strategy, and it's because it helps you out with identifying what's really going on in the markets. If you don't know what divergence, like I said, it's a strategy that pretty much combines your indicator, which indicator that may be, whatever one you may use. My indicator that I use is RSI. Some people use the MACD, some people use an oscillator. It doesn't matter from what I know, but I like to use it with the RSI. But like I said, divergence is pretty much when you combine an indicator and what actual price action is showing you to spot potential market reversals. So, like I said, it is a powerful tool because if you can spot divergence correctly, you can put yourself in a great, situation with some bomb trades. Um, and it's two types of divergences to look for in the market. You have bullish divergence and bearish divergence. And we're going to go over them on this video. It shouldn't take too long. I already have some examples preset on one chart. I'm going to just show you how to identify them, and then I'm going to show you, just how they play out. And just like I always say, usually when you find stuff forming on these higher time frames, as usual, just know that that setup or that move is going to be a bigger um, reward, put it that way. And you can also, just combine, so many other elements to this to, use. And yeah, like I said before, man, if you combine, a couple elements together, like fibs and supply and demand and all these other elements, and you put all that stuff together, and just it's like the icing on the cake, man. More confirmations, better results. But let's go ahead and jump into it, all right? So divergence, right? Like I said, there's two types of divergences in the market. You have bullish and bearish divergence. And what I want to do is kind of identify what it is and, how it is it, work. So for an example, I'm going to start right here because this is the first divergence I spotted out. This setup right here, if you look, right, market is kind of flat, right? It's like price hit a ceiling. You see what I'm saying? Like it was going up and it threw a lot of wicks, right? Price was just failing to push above that area. But if you look down on the indicator, right? If I take these crosshairs and put it literally where this starts at, and we look down at this indicator, right, on RSI, what happens, right? You see that it is already making a downshift or movement to the downside. So a situation like this is called bearish divergence, right? It's showing us like, a bullish market setup, price, trying to push higher, but it's failing to. But, RSI, and this indicator is based off of what, pretty much the people or the market makers, I would say, what they're trying to do in the market, which way they're trying to actually shift the market. Like it's kind of a tool, like I said, to use to see what they're doing. And sometimes divergence doesn't always be long term. So always keep that in mind. But nonetheless, a situation like this, this white area here is showing you that price is way overbought. And literally, like I said, looking at the candles, or price action, like I said, price wants to shoot up, or it's attempting to go higher. But like I said, here on RSI, we already have a bearish movement down, and that's exactly what ended up happening on this situation. Price ended up just dropping, and it went about what 300 pips to the downside. So that is a good form of bearish divergence. Let's see if I can find some bullish divergence here. So like here, delete this real quick. So right here, we have bullish divergence. And we're going to try to find a couple setups before I go to my other chart where I already have it marked out. So same situation, this is bullish divergence here, right? Price was actually going down. All right, it's hitting this floor, it's not, getting much momentum to bust through this support level. But same thing as before, if we take the crosshairs and we look straight down at RSI, right, you can see, move that out the way. I hate when that pops up. I'm trying to get this on here without, but yeah, so if you see right here, like I said, it's a flat market, but on RSI, we already have bullish momentum. Trade definitely being over sold. That's why it's in this white area. But we also have the momentum shift here on RSI. And then eventually what ended up happening, price shot to the upside. Total of 400 something pips. Now, that doesn't mean you're going to catch the whole 400 pips all the time. But, like I said before, if you're looking at this stuff on higher time frames, it does potentially help you find, setups like this, especially when you're putting a lot of elements together, as far as mixing confluences. Like, that's the key to all of this. Right here, same situation, another example of bearish divergence. And it's a nice double top, right? So you kind of see where I'll be getting at with, market structure and mixing other elements. If you know what side of the trend you were on, and you're putting all your stuff together, fibs and all that, and you see in market structure, you got a reversal candlestick pattern. It's like all the elements are there, telling you, hey, this setup is going down. Then you have bearish divergence, price, hitting the ceiling, failing to go higher, but already having a momentum shift on RSI where price is shooting down. Here's another example of bearish divergence. Same thing here, right? We got a ceiling. Price is failing to push above higher, but right below it, like I said, if you look at the RSI, right, we got a momentum shift. Price going down. Price went down. Price went down. And divergence, like I said, is not hard to spot. As I said on my other video about Fibonacci, depending on how long you've been trading, some of these setups or some of these things that you need to look for can come pretty easy when you've been trading for a while, because it's kind of like what to look for. Another example of bullish divergence, same thing. Price actually formed a double bottom, was failing to break this level of support. But if we look right down here, look at the RSI, nice shift to the upside, was already oversold, and just clear sign of buying pressure. So price shot all the way up, especially with these higher time frames. Like I always state, if you get closed volume, especially like this, this first candle on a 4-hour time frame went about 200 pips. Easy profit. You could have probably held this for a long time, and that's the power behind divergence. Like I said, if you're able to spot this, especially on higher time frames, which they don't just show on a 4-hour, you can spot them on an hour, you can spot them on a 4-hour, the daily. I haven't tried to spot them on the weekly or monthly yet. They do show up on a 15 and a 30 minute as well, but I only typically use my 4-hour on my daily, just because how I chart up now. But those are pretty much some examples of bullish and bearish divergence. I'm gonna go to EJ because I already have some preset situations here of divergence, and I just want you to see like how they all played out. So same thing right here, right? Another situation of bearish divergence on EJ. We just went over EJ on the last video with with Fibonacci, and just think about it, right? This is that counter trend. This is the first measure that you would have measured on Fibs right here. If you watched that video, you will remember this is the first push that we measured on Fibonacci. So if you'd have measured this from point A to point B, then breaking it down, going to lower time frames, you would have seen that this was a clear sign of a divergence. You got a double bottom, and I mean, excuse me, not double bottom, a double top, and literally price was oversold. Price was shifted down. We already know that went like 200 something pips. Same thing here. Flat bottom, prices fell into break this level of support, formed a nice double bottom or triple bottom, however you want to call it. Some people, see things differently. But if you look down here at the RSI, you got the momentum shift right here. Price shifting to the upside. But like I said, it was kind of remaining flat right before it took off. Not all situations will the market just be flat like this here, right? We have kind of a counter uptrend in a sense. It's like an uptrend, but instead of us putting it at the bottom, we put it up top because price had a high and then it came back up and just kind of made another high. But looking at RSI, it's literally going down. This lower point right here, right? If I take the crosshairs and stick it right on this lower point and we look straight down, you will see that the lower point is higher than the actual higher point on RSI. So this is the lower point and this is the higher point. But on price action, your lower point is the higher point on RSI. And same thing with the higher point, it's the lower point on RSI. So the momentum shift is already happening. And if you mixing all the other elements like I've been teaching together, that could have been a very, very profitable trade for anybody that was in it. Same thing here. Flat bottom, price comes down, form like a double bottom. Doesn't want to break through this level of support, but if we look straight down on RSI, you can see that momentum shift once again. Literally, price oversold and shifting to the upside. I mean, nice push to the upside. And like I've stated on the video with Fibonacci, you can also set targets, just by looking at previous levels of structure, right? Like I said, we're looking at the 4 hour, so this could have been one level here, another level there. And if you want it, you could have put one there. Excuse me, I had to sneeze. But yeah, so that is another sign of bullish divergence, and we see price actually broke through all those levels, push high up for some crazy profit. Another example, bullish divergence, flat bottom, price come down, hit once, hit twice, hit one more time, took off, nice triple bottom. But if we're looking at RSI, now this right here can mess some people up because it's still kind of flat, right, in a sense, but it is angled nonetheless, right? Sometimes you have to really assess these, right? It's low, it's a little bit oversold, but it still show, price moving to the upside here. And excuse me, here on the candles, we have, like I said, a triple bottom forming, or price action trying to push lower, but failing to do so. And I think I got a few more examples on here. Another example of, the lower point being the highest point on RSI. If we look down, you see that's that lowest point right here. And then the highest point on RSI is the lowest point, bearish divergence. Clear as day, big rejection wick, bearish engulfing candle. All the elements are there, double top, and price shot down. This could have been a super clean trade to take for about 100 pips plus. You gotta love divergence, man. If you know how to really work this, I mean, you can make some serious money. Here's like another form of it right here. It's just the flip of what we kind of been seeing, right? Price is going down lower, but if we, like I said, look at RSI's flipped the opposite way, shoot to the upside. Bullish divergence. think it's like our last few examples right here. Another example of bearish divergence. Price hitting, kind of formed a triple top, failed to make those higher highs or push to a higher level. Price action is just not going up. Flat top, and then literally on the RSI, it is already having a downshift. Bearish divergence, and I think this is the last example right there. Yeah. So that is the last example here, which bullish divergence, nice double bottom. But looking at RSI, it's that first low point, the second low point, and clearly, like I said, they're more leveled than anything. Even if I scoot this up to kind of put it right on the candles, like I said, they're more leveled than anything. Don't mind the wicks. But then if you're looking at RSI, it's already oversold. The first point is definitely lower than the second point, but on price action, they're level. And that is bullish divergence. And as you can see, price literally shot all the way up. Which was a very, very beneficial trade. Like I said, it helps you spot these major reversals. 250 pips, easy. And also, there's other ways to confirm that thing would have kept going. And I'm gonna talk about this in our next video, which is called breaker structure, because if you're looking at this right, like this is a high point, low point, lower high, another like lower low area, right? Lower high point, and then another low. Like I say, even though they're kind of low, close to each other, look what happened. Ultimately, price just went up, broke structure because this is a lower high point on a 4-hour time frame, and price all they did was shoot up, break this lower high point, come back over, retest, and took off to the upside. So even if you didn't see, the divergence happen, you could have caught this off the breaker structure situation and rode it up to the upside. And as always, what would be a big ticket video, right? If we didn't see how something like this could have worked in our favor, right? Go long. You already know risk to reward is everything. 33 pip stop. 66 pip take profit. We're just doing 2 for 1 for video purposes. And then slide this in some. So depending on when you took this actual trade, price, don't think it actually hit your stop. Or I don't think it actually hit that stop. It's pretty close. But like I said, depending on when you would have took this trade, you could have benefited a lot. Sometimes you might want, like I said, wait for price action to give you that confirmation. So as soon as price would have came down and pushed up a close like this, if you'd have took it on that next candle, you'd have been good to go. And you could have held it as soon as it broke structure right here, which was, I think, right in here somewhere. Well, yeah, this is pretty much it. When it broke structure right here, and it came back at the retest, literally same situation. Smart trader would have known, hey, this is another setup that I could just, pretty much double up on. And I'm just, like I said, for video purposes, doing 33 pips in a 2 for 1 situation. A lot of times, you obviously want to go higher than 2 for 1, but boom. That we know went a lot higher. So you could have had 2 entries, or if you were like me, sometimes I stack. I might do 2 here, then 2 there. So I got 4 potential entries running, where this first one could have brought you back about, like we said, 277 pips. And then the second one could have brought you potentially back about 83 if you would have closed it all a little early. Some people probably would have got a little afraid to close this out, but having this one still running would have let me hold it a little longer. Let's see, what was this? March 28th to April 10th. I probably wouldn't have held it that long because I don't swing too much, but I did want to see what was going on. But if you would have held both of them, this was like 277 pips and 200 pips. So you could have caught almost 500 pips, or literally about 480 with just 2 trades. But that is divergence. It is a powerful tool. As always, if you guys need any coaching, any mentorship, My information is in the description box below. You can reach out to me on Instagram or send me a message here on YouTube. If you guys have any questions at all, just shoot me a message. If you guys got any comments, drop them down in the comment box below. Other than that, study, study, study. Always take notes, and happy trading. See you guys on the next video.